Hello everyone, welcome to Dikshant classes. Today I am going to discuss about the remaining parts of budget 2026. First of all, I will discuss about the deficit and debt. Here the question arises, what is deficit? Deficit means that it is a alarming situation for the government, whether the government is reduce their expenses or increase their income sources so that it is meet the expenditures effectively and efficiently. Next is debt. Debt is a term which describes about the government taking loans or raise finance from different financial institutions or the different countries where the government is raising the money for the different projects. Now moving on the statistical data of deficit. Hmm, Fiscal deficit is 5.5% in the financial year 2024. In the financial year it is 25, it is 4.8. In the financial year 2026 it is 4.4. In the financial year 2027 it is accepted to 4.3. Now moving on revenue deficit. In the financial year 2024 it is 2.5. In the year 2025 financial year it is 1.7. In the year 2026 it is 1.5. In the year 2027 it is accepted to have 1.5, same as financial year 2026. Next is the effective revenue deficit. In the financial year 2024, it is 1.5% of GDP, and in the year 2025, it is 0.9%. In the year 2026, it is 0.6%. In the year 2027, it is 0.3%. Next is primary deficit. In the year 2024, it is 2%. In the year 2025, it is 1.4%. In the year 2026, it is 0.8%. In the year 2027, it is 0.7%. The trend show that there will be the reduce in the fiscal deficit of a government from the year 2024 to 2027 every each year. And in the case of revenue deficits, and it is also increased from 2024 to 2027. In the effective revenue deficit, in this case also the government deficit will reduce, and in the case of primary deficit it is also reduce their deficit. Now moving on, central government debt. The central government debt is 57% of the oil of GDP in the year 2024 financial years. In the financial year 2025, it is 56.2% and of GDP. In the year 2026, it is 56.1% of the GDP. In the year 2027, it is accepted to have a 55.6% of the GDP. The trend showed that the central government debt is reduced year by year. Now moving on, reducing the litigation pains. The government is giving a relief for the companies in the litigations. The pre-deposit of tax demanded for filing an appeal is proposed to be reduced to 10% from 20%. This will lower cash outflow and improve liquidity and ease the burden of litigations. Now moving on, clean energy exemptions. The government extended custom duties exemptions for on capital goods for lithium ion battery storage and so on sodium antibiotics for solar glass boosting costs and competitiveness and strengthening India's renewable energy value chains. Next is a clear tax runway. A new streamlined process for unilateral advances pricing agreement in the IT sector's target resolutions within 2 years, extendable by 6 months, offering exporters and multinational is faster transfer pricing certainty and reducing the risk of large tax demand. Next is Matt Rose line. All non-residents tax under the present schemes are exempted from MAT, providing immediate relief to foreign shipping and aviation and select services companies and improving certainty and attractiveness for international business operating in India. Next is GST momentum. And GST remain a backbone of tax revenue. In the financial year 2023, it is 8.5 lakh crore, which is 27.8% of the total gross tax revenue. And in the year 2024, it is 9.6 lakh crore, which is 27.6% of the share in total gross tax revenue. In the year 2025, it is 10.3 lakh crore, and which is the 27.1% of the gross tax revenue. And in the year 2026 is accepted to have 10.5 lakh crores, and which is 25.7% of the gross tax revenues. And in year 2027 it is accepted to 10.2 lakh crore, which is 23% of the total gross tax revenue. The trend showed that then there will be the increase in the government revenues from the year financial 2023 to 2026, but in the reduce in the year and little bit reduce in the year financial year 2027. Next is the custom export pushing. Government is extended duties free imports for export sectors and the creation of the 12 new tariffs items for the clarifications clarity. And there is a tariff exemption for the strategic manufacturing sectors and advance ruling is valid for the 5 years AU duty deferred revenue to 30 deferred extended to 30 days. Special economic zone units are allowed DTA sales flexibility. 10 lakh courier export cap removed. Next is custom collections in the first 5 year. In the 2020-2021, it is 1,34,750. In the year 2021-22, it is 1,99,728. In the year 2022-23, it is 2,13,372. In the year 2023-24, it is 2,33,067 rupees. In the year 2024, it is 2,33,201 lakh crores. In the year 2025, it is 2,58,290, which is early. In the year 2026-27, it is 2,71,200. The trend showed that there will be increase in the government customs collections in the past 5 years. It is amount is showing in the crores. Then now moving on the state overhead. First is the establishment of the expenses. In the year financial year 2023, it is 7.2 lakh crore, which is 17% of the total budget. In the year 2024 financial year, it is 7.7 lakh crore, which is 17.3% of budget. In the year financial year 2025, it is 8.3 lakh crores. It is at 17.8 percentage of budget. In the year for financial year 2026, it is 7.8% lakh 8 lakh crore, and which is 15.8 percentage of budget. In the year financial year 2027, it is 8.2 lakh crore, and which is 15.4 percentage of budget. As the expenses of the government will be increased every year from the financial year 2023, and it's so by the trends to 2027. And but the percentage and allocation of the total budget will increase up to 2023 to 2025, but decrease in the year 2026 and 20 and accepted will also decrease in the year 2027. Next is police expenses. Next, in the year financial year 2020, next is pension expenses. In the year 2023 financial year, it is 2.4 lakh crores, and which is 5.8 percentage of budget. In the financial year 2024, it is 2.4 lakh crore, and which is 5.4 percentage of budget. In the year 2025, it is 2.7 lakh crore, which is the 5.9 percentage of total budget. In the financial year 2020, it is accepted to have 2.9 lakh crore, and which is the 5.8 percentage of budgeted. In the year financial year 3 lakh crore, which is the 5.5% of total budget. The trend showed that there will be increase in pension expenses each year, but the allocation given by the government will be reduced from the financial year 2020. It is 5.8% of total budget, and decrease in the in financial year 2024 5.4, then increase in financial year 5.9%, then decrease to financial year 2027 5.5. Next is police expenses. In the financial year 2023, it is 1,07,187 crore, 2.6% of total budgeted. And in the financial year 2024, it is 1,15,393 crore, and which is 2.6% of total budgeted. In the financial year 2025, it is 1,34,950 990 crore, and it is 2.9% of total budget. In the financial year 2026, it is 1,45,650 crore, and it is 2.9% of total budget. In the year financial year 2020, it is 1,52,588, and it is at 2.9 percentage of the total budget. Total budgeted. The trend showed that there will be the increase in the expenses every year, and also in the same way the allocation given by the government is also increased. Thank you so much for listening carefully. If you have any query, and you can comment, I am surely reply. And please like, subscribe, and share my channels with the needy ones, and your friend with friends, relative, and known ones. Thank you so much.